Welcome to this new episode of Your Next Trade called today Rotation Before NVIDIA. So many things to discuss. As always, we're going to be running through all what we need to know about NVIDIA earnings that will be this week on Wednesday after the close. We will be talking about how this market, despite being flattish on the week, actually many things happened. We're going to be going through an ID that was generated through the mentoring program, and I'm going to be sharing that with you. But let's start with what happened for this week with an example, a good one about so this is an index built by Goldman Sachs, and it's a momentum one where you have a basket of long momentum stocks versus short momentum stocks. So this is more or less, the Palantir of this world that is going up and up and up, versus the really the underperformers. And as you can see, between Monday's open and Friday open, actually there was a change of minus 12.5%. So this week was pretty much about the huge rotation into the market, where we saw the tech, we saw anything that was semiconductors, really the big winners of this year, which have been rotating a lot. We're going to see later as well that despite this correction for over the last 5 sessions of 12%, the momentum trade has been really strong, and we should be putting any moves into a much bigger time frame, and this is what we're going to be doing with the technical analysis. So let's start with the week-to-date asset performance. And as you can see, despite a lot of noise, a lot of volatility, let's say, so I think now the struggle for many traders is if we have on a weekly basis a plus 2%, minus 2%, it's almost like the end of the world. But on a weekly basis, from Friday to Friday, the S&P was flattish. Same with the Nasdaq. What is interesting is the Russell is down 2%. So there were a lot of talks of people saying, the market is going to be broadening. Don't worry, we're going to have a catch up from the underperformers that are going to be following the Fabulous 7 and some other names. But no, this is not what happened. Actually, the dogs still are underperforming and are down 2% for the week. Other market than the US, actually, if you look at Europe, doing pretty well. But really, for the currencies, pretty flattish. The big movers, as we can see, this is crypto. So we flagged, I think it was 3 weeks ago, that in terms of technical analysis, cryptos, we are talking both Bitcoin and Ethereum's, kept on being rejected. So despite going to 125,000 for the Bitcoin, we saw some selling pressure, and actually pressure coming from long-time holders. And we saw this week another confirmation when Bitcoin went into the 95,000, down 8.5% on the week. So there is a sell-off in that space that is going on. For the commodities, the real commodities, we are talking gold, 2%, up 2% on the week. Same for copper. What about the week-to-date industry performance? And this one, again, is interesting because you do have like the S&P 500 in the middle, but you see the dispersion between the winners and the sellers. So when you have dispersion like this, that very often happens after a big move, and this is what we saw from the equity market since the start of April, when we went from 5,000 to almost 7,000 in less than 6 months. So we are talking a 40% move almost. And at the end of those moves, you need to change a bit of the exposure. And one of the big obviously catalyst that we're going to have in the next few days is NVIDIA earnings. So we saw for this week some of the names that were doing very well so far, like nuclear down 6% on the week, but as well semiconductors underperforming as well. Other end of the spectrum, obviously anything that is a bit more defensive, we are talking gold miners, but as we're going to see here for the sector performance, healthcare doing pretty well, energy, materials outperforming the market, and consumer staples, and anything that is more aggressive beta, like consumer discretionary. So Tesla was really struggling this week and went under 400. And as well, IT, as you can see, is really flattish on the week. So a lot of dispersion for this week. What about the rates? We are at 4.15 on the 10 years. So what is interesting is the expectations for the market for the inflation going forward has been on the way up. So we are seeing the US 10 years not coming down that much in terms of yields, 4.15%. So we had a trading range of between 4% and 4.2%. But that's the same picture that we have for the Fed funds expectations. So we have the FOMC meeting in December, and now the expectations are roughly for a 40% chance of a minus 0.25% cut. So really, we have been coming down massively. I explained on the trading community that the expectations a month ago were, I think, around 95% of a cut. Now it's at 44% or roughly 40%. But there are tons of data that will be coming in the next few weeks. We do know that due to the government shutdown, there is a backlog of data that will be coming starting this week. We're going to have the NFPs for September. Then we're going to have CPI, PPI. Some of the numbers from October will probably never go out. That is quite the beauty. If you think about it, we are talking the US, and we are not going to be able to rely on any US data for the month of October. So that tells you a lot about the quality these days of those data. So let's look now about the VIX. So VIX still pretty high, 20%. So implied volatility, everything volatility has been higher. And very often, when you have higher volatility, that translates into, or that's the uncertainty that has been on the rise. Very much as well, when you have a higher volatility, that is a good sign that the macro is deteriorating. And actually, this is what we have been seeing over the last 2 to 3 months, that the US consumer, we are talking the low end of the US consumer has been really struggling. And that translates into the numbers, and as well some volatility into the numbers. So let's look at the technical analysis. We could be starting from time to time with the Nasdaq. So as you can see, we made the highs that were here. And what is interesting, and that's the same for the S&P, we have been bouncing on above this 50 days moving average. You can see this big move for the week between the high and the lows. We managed to close above the 50 days. So what does it tell you? Is at one stage, we're going to be closing below these 50 days, and then it's going to be a big sell-off. So everyone is watching the same things these days, and that's the same with the S&P, where roughly the 50 days moving average is at 67.30 something, and you can see rejection, we go up, but that means that we have more and more the odds of a sell-off on the way up. I want to be flagging different ones. I want to be looking obviously at Bitcoin. So Bitcoin has been the dog, really, really struggling. So we saw the rejection before again and again. I think the next level is probably a bit lower from there. We are talking 91,000, 92,000. So for the first report, I think we got a 3 to 5%. But now the questions are, did we see the top on the crypto? I want to be flagging as we are looking as well at how sectors have been doing one versus the others. So we do have like 11 sectors in the S&P 500. If you look at XLV, so this is for healthcare. As you can see, most recently, we had a very nice bounce. Most of the bounce, we are talking 50% of the bounce is due to Eli Lilly, LLY. So that has been really pushing the sector. And you can see, we are back to the 200 moving average. But really, the trend since 2023 has been, being demolished. We looked as well doing a mentoring, and I'm going to be doing a mentoring session about the XLP, same versus the SL versus the SPY. So this is consumer staples versus the S&P. So that tells you about how defensive I've been doing over the last few years. Finally, looking at where we started this call. So this is about the trend of the momentum stocks. This is a Goldman Sachs index, as I said, as you can see, since the start of 2023. So what is the start of 2023? This is AI. Okay, so over the last 2 to 3 years, the market has been driven mostly by AI. We do know that I think it's 60 to 80% of the EPS growth coming from the S&P is from AI. And as you can see, you know, we had a really big move here from the 2023 onwards. And over the last few months, we are talking since September, we had an acceleration. If you think about it, you go from 400 to roughly 580. So that's really, really a big move. We are talking 30 to 50 to 40% move. So the move that we had over this week, this 12% from the high to the top, it has to be put into the long-term picture. Momentum has been really, really strong. And if you think about any reversion to the mean, we went back into the 50 days. But if you go back into something like the 200 days moving average, we are talking, you know, 90 points lower, so almost a 20% move lower just for reversion to the mean to the 200 days. So really, this year we have seen extreme moves due to retail, due to names that have been pushing the market much higher, the Palantir of this world. And now the question is, you know, are we going to be moving from the 50 days roughly to the 200 days? It doesn't matter, you know, if you use 50 or 200, it's more about understanding your midterm picture and your long-term picture. So midterm, yes, we go back to the average, but really long-term, we are very much extended. So let's go back into the Excel spreadsheet if I manage to do it, looking at what happened for the week. So this is first for the S&P 500. So let me try to do a bit of drawing. So this is for US&P, where we started the week. Okay, so this is your week. So it feels like it's pretty much flattish, but as you can see, between the 67, 60, so here you do have like the 6900 and you have the same on the other way around. So that means you see the dispersion. When there is dispersion and a bit of rotation, you have much higher volatility between the highs and the lows. We managed to finish flat on the day, or on the week, should I say, but overall the picture has been for much higher volatility. Why? Because we're still gonna have uncertainty with the government shutdown that was announced at the end. So that was roughly here. We managed to rally another 3 days on the expectation that finally everything will be restarting. But pretty much a lot of rotation. Why? Again, because we're going to have NVIDIA, and why? Because we had massive moves from those names. So Fed expectations, as we saw, have been lowered. So we'll see, depending on the macro data that we will get soon. We did have an interesting headline with Michael Burry, which was, we made a fortune during the great financial crisis. Being short the space of mortgages and other ABS, actually decided to shut his hedge fund. So this is a sign that really it has been a tough world for short sellers. Be very careful if you're a long only guy to mock those guys, because they are really, really good at what they do. He's still short Palantir and still short NVIDIA through put options. But you know, what is happening is really retail is buying all the dips. So here it's coming from my Bloomberg, and that is giving you what has been the flow over the last 5 days in terms of ETFs. And as you can see, the 10 inflows are much, much bigger than the 10 outflows. So we are seeing retail buying the dips over and over and over. Finally, for this page, I want to discuss, one of the mentoring sessions that I had. I think it was on Wednesday after the close, where I discussed with one of my mentees. He wanted to be defensive, and he managed to do a very good ID generation. He's only in session number 3. So he looked at consumer staples, he looked at the space. So either you can do with the XLP, but he managed to go deeper and finally ended up with the PG, Procter & Gamble. And as you can see for the numbers, so we divide the time into what happened before and what's going to be expected in the near future. So we are talking about growth roughly like CPI plus, but we do have like very good margins. We do have like EPS that will be growing nicely as well. We are talking 5 to 6%, so pretty much defensive. PE ratio below the overall market. We are talking very nice free cash flow generation, around 17 billion. So really, really good. So we look at the structure, how to structure this trade. We came out with interesting ways of doing it. Either you can do versus the SPY, you can do versus the XLP. I think versus the XLP, it looks really good. Because you can have a tight stop loss of 4 to 5% with an upside of 30% something. So your risk reward is 6 to 1. Or you can do, if you want to kill all the risk, idiosyncratic risk of this company, you can go as well with a call spread with December or June next year. So this is what we do during the mentoring sessions in the very first days of the mentoring, where we look at the quantitative analysis. And this is the same that we have here with NVIDIA coming for this catalyst going forward. So let's start with the catalyst. We do have some macro numbers. We have the flash PMIs on Friday. We're going to have the backlog of macro data from the government shutdown. So you should be almost checking every single day. On Thursday, we are expecting the September's NFPs and retail sales. Even if it's September, the market will be looking at it. Why? Because it's going to be impacting if the Fed is going to be cutting or not. In December, we're going to have as well tons of Fed speakers, so probably way too much. We have the FOMC minutes on Wednesday. We do have like a bit of bond supply, but I want to be talking obviously about the earnings, and we get two. We get Walmart on Thursday, where the CEO just announced that there's going to be a new one starting on the 1st of February. But the big one is obviously NVIDIA. So NVIDIA after the close on Wednesday, what are the expectations? So let's start with volatility. Looking at the option with the weekly straddle, we are expecting a move of 6.5% on the day, which is pretty much how the stock has been moving over the last 8 earnings, as you can see, by 6%. But as you can see, most recently it was pretty quiet. When it moved, it was really a year to 2 years ago where we had some really, really big moves. So what about the expectations? So this is here for the expectations for the EPS and for the sales. As you can see on the year on year, we are talking a growth about 55% roughly for both EPS and revenue. So this is absolutely gigantic. We are talking 54 billion sales for the quarter. That is just absolutely massive. But on the quarter on quarter, as you can see, growth is decelerating. So it's still a double digit, 18%, but we were coming from much higher numbers. Still, again, really good numbers, but the growth is decelerating. And what is interesting, if you look at the surprises on the last 4 earnings, you can see the trend that actually revenues have been beaten less and less. So we went from 5.8%, 3.4%, 1.7% to 1.5%. So what does it tell you? Still really good companies. We know we are talking about a company that is going massively year on year, but the beats are not as big as before. So this is going to be a big driver, obviously, on Wednesday. And this is as well for the whole AI confirmation of not of another leg up. So overall, that translates into for the S&P about a plus minus 2% weekly move. So a bit higher than we have for this week. So for the S&P, this is what we have, and the Nasdaq is a bit higher due to the beta. So really the big one is going to be Wednesday. We're going to have the NVIDIA numbers as well. We should be looking at the macro data. After that, it's going to be Thanksgiving. That means we're going to have the Black Friday with the Cyber Monday as well. So we would like to know how the US consumer is doing. We're going to have, obviously, in December, as I said, the FOMC meeting, and then the quarterly end of the year options expiry. So this is it for me for this week. If you got any questions about, how we do the mentoring, how we do this ID generation through the 4x4 video series, if you want to join us on the trading community on Discord, where we have 30 channels beyond the paywall. Feel free to come. Then any questions, you can send me an email at greg@duponttrading.com. This is it for me for this week. Have a good trading week. Bye-bye.